Welcome traders to this week's analysis of DXY dollar index. My name is Vic. Thanks for joining me here. If you're new here, make sure you subscribe to this channel so that you get alerted by YouTube for the new analysis and new videos that I post. So let's go and see what dollar has been doing. Now, if you have been following my analysis for some time, you know that I am bullish on dollar. I've been bullish from here. The market went up, then we started to took a long position. We started to take long positions from here, and then market here, approximately here, it started to consolidate, and it was creating a wedge kind of pattern. This is what I mentioned in an analysis a few weeks ago. So this is the structure which market created, and we knew that market was going to come back down. One of the reasons why the market came here in the first place is to close this gap. The market, this particular market, does not leave any kind of gaps open. So sooner or later, the market is going to come there and close this gap. So this was closed when the market came here, and then it started to turn bearish. It went up to create a double top sort of pattern, and then started to go down. Now there are two things which have happened in this market, which are very important. One is this push from here, from this point, has been explosive. Okay, then second one, this push which has been explosive. Now this one was actually like kind of unexpected, because most of the traders were thinking that this was actually going to go down, but the market got pushed up. And you could see the effect of the same in other currency pairs and metals as well, like in gold as well. So this is something which caught a lot of traders by surprise. Started to go up and then created a double top, and then now it started to fall down. There is another thing that you should be aware of, is that remember I just mentioned that there was a gap here which got closed here. There are two gaps which are also available. One is here, another one is around here, and these are exactly the same place where the market started to do some ballistic ballistic sort of movement from here. So market went up from here, at some point in time. It is expected to come down and close that gap, and if the market turns very bullish, then at some point in time here, market will come here and close that gap, and ultimately it will start to go back up. But you never know when it is going to happen, because it can take a long period of time, and it may or may not happen very in coming week or coming months, even this year as well. So you have to look at the overall structure. Overall structure is still telling that market can go up and down, whatever it is trying to do, but ultimately the dollar wants to go to near about 95, 96 area, right? So you have to just keep an eye on that bullishness. But at the same time, on the lower time frame, you see that market is right now in a consolidation, and if this level is broken, let me actually clean this up. So this is a very important level here. This is sideways movement right now. The market will probably come here, close this gap, and go back up. And once it has started to go back up, you need to watch this particular movement, because if it actually goes beyond this with some strength, then it is not going to stop. It will probably not come back here to close that gap anytime soon. Then it will happen, something like this will happen. It will probably go to 95, 96 area, and then at some point in time it will come back down. So you have to monitor this particular area and what happens after that. This is going to be very important, and most probably this area will be hit next week. So it's going to be very, very important. So watch that. If the market actually breaks through this, then you can see that market will create an M sort of pattern, and in that case it will try to come back here to close that gap. So these two areas, this particular level here and this level, these are two very important levels. Third important level is obviously going to be the higher side of it, because if the market breaks through this, then we are looking at higher price levels. So that's what we have here in terms of structure. Now let's go back and open the original analysis. So this is the gap, and this is the gap I was just talking about, and these levels are still intact. These are I should have actually refined them a little bit. So what I'm going to do is, as soon as I get a chance, I will refine them and put them onto our Telegram channel and other places. But for now, these are looking very good. So far, these levels can act as support and resistance, and the market is kind of coming down to this level. This is where the gap is. That's on daily time frame. If you go to the lower time frame, the story can be a little different. On lower time frame, if I just close this once again, on lower time frame, what you can see is that market is already creating an M pattern, right? So it's quite possible that market may go up a little bit, right, to maybe this midpoint or this midpoint, somewhere around here, and then fall back down. That's a possibility. So what you should do is, as soon as the market opens, you should start looking for this sort of movement. If the market actually gives you this sort of movement, you can play that for a long. Otherwise, you can look for some kind of rejection or some kind of confirmation around this area or around this area, and then look for a short position going down. Okay, because ultimately this is going to form another bigger M pattern. If the market goes above this particular section or this section, then obviously this is going to be bullish. That, like, that's what we just discussed. So if I bring in analysis once again, so these are all the levels that you have. Like, I'm going to just leave it like this, and I'll post a screenshot of this in the Telegram group as well. So, but you should be able to see all the levels here in this video as well. Let me just move this so that you can see all the levels which are here. Okay. Now let's go and look at it on Watt and Visage. On Watt and Visage, what we have is that this is a monthly time frame, and as we can see, the market has turned bullish. Now this is what we have been expecting for months. This is bullish, this is blue, and we have got a signal as well. This is not a very good signal. The reason behind that is because this is a bearish candle. The signal appeared on the bearish candle, so this is of little lower priority, little low probability. But so far it has been playing out a little bit, but this month is not over, so that is why it is possible that this candle can actually come down to test this water wave, which is approximately the same level as that gap, like, the lower gap that we were just talking about. And once the market has, like, touched that water wave and got a confirmation there, then we are looking for an upward move back into this water curve, or maybe this profit target as well. So, and that is approximately near about 95, 96 area, right? So that's what we have on monthly time frame. Let's go to the weekly and see what we have got there. If I go to the weekly time frame, this is looking bearish right now, because at any moment in time this can actually turn red, and you can see the market has started to, like, turn a little bit. The curve has started to, like, show, sorry, the trend has started to show a little curve in there. So as soon as, like, you see a red color, then you know that, the market can go down. And besides this has already turned red, and overall this trend has already been red. So there are two reds that we have got. We are just waiting for the third red, and then we can see that, the market can actually fall down from there. So this is weekly, and it may take weeks, right? So let's go and look at daily time frame now. On daily time frame, we already have an engulfing sort of candle here, and we do not have a bearish signal as of yet, because the market has not actually given us any time to go to change the color here. So as soon as the color changes here, then we will have even bigger bearish movement. And this is where I was talking about, like, the market can actually come to the middle of this point. There is a gap here. This is the gap I was talking about, right? The first gap. And that gap actually kind of coincides with water trend here, water curve here. So it is possible that market will probably close that gap, touch the water curve, and then go back up. And that is why you should be aware of that as well. If I go to the 4 hour time frame, let's go and look at 4 hour time frame. On 4 hour time frame, there was a sell signal here, which the market actually respected. So there was a red here, there was a red here. This is aggressive one. You could have actually gone for this profit target. If you had taken a non-aggressive approach, then you would have taken this profit target. So in either way, this has actually worked out. Now, reason why I told you, like, that, this M pattern could actually push the price up initially when the market opens, is because it needs to, at some point in time, it needs to go back up to touch that water curve. It needs to come back to test that once again. So watch out for that. Market can go back up, and if you see any rejection or something like that, then you can look for a short position once again into DXY. Even if you're not trading DXY, you should still watch this market, or you should still watch this index, because this is going to, like, this actually drives the whole market, and indirectly or directly, everything is dependent on dollar. So the dollar index is very important in your analysis toolbox. right? So this is my analysis on the dollar index. Hope you enjoyed this analysis, found this useful. If you did, make sure to hit the like button, put in a comment below this video. If you have any questions or any doubts, put them into the comment section and I'll try my best to answer them. And share it with other traders and trading communities. Thank you, and I'll show you in the next video.